So here's a number that's going to blow your mind. Silver is up 145.27% year over year. Let me say that again, 145%. If you had put $10,000 into silver just 12 months ago, you'd be sitting on over $24,000 right now. But here's the crazy part. Just 10 days ago, you would have had nearly $40,000. Because on January 29th, 2026, silver hit an all-time high of $121 per ounce. And then it crashed. Hard. We're talking a 40% plunge in a matter of days. And now everyone's asking the same question. Can silver pull off another massive gain like this, or are we watching the party come to an end? Look, I know what you're thinking. A 145% gain sounds incredible, and it is. But when you see a 40% crash happen in less than 2 weeks, it makes you wonder what's really going on. And that's exactly what we need to talk about today. Because the silver market right now is unlike anything we've seen since 1980. Yeah, I said 1980. We're talking about volatility levels that haven't been touched in over 4 decades. So whether you're already invested in silver, thinking about getting in, or just trying to understand what the heck is happening with precious metals right now, you need to understand this story. Let's rewind to early 2025. Silver was trading around $32 per ounce. Nothing spectacular. It had been range-bound for years, honestly kind of boring compared to what was happening in crypto or tech stocks. But then something started shifting. Throughout 2025, we started seeing this steady climb. And it wasn't just retail investors on Reddit getting excited. This was institutional money starting to flow in. We're talking about real, serious capital. What was driving this? Well, several things were converging all at once. First, you had geopolitical tensions ramping up globally. When uncertainty rises, people traditionally flee to precious metals. That's the classic safe haven trade we've seen play out countless times throughout history. But this time, there was something else happening simultaneously. The industrial demand for silver was absolutely exploding. And I mean exploding. Here's something most people don't realize. Silver isn't just a pretty metal you stack in a vault. It's probably one of the most industrially critical materials on the planet right now. Solar panels need silver. Electric vehicles need silver. AI data centers need silver. And the amounts we're talking about aren't trivial. In 2024 and 2025, solar manufacturers alone consumed over 25% of the entire annual global silver supply. Think about that for a second. 1/4 of all the silver mined each year is going into solar panels. And solar adoption is accelerating, not slowing down. Then you add electric vehicles to the mix. EV-related silver demand jumped 20% in 2025. Every electric vehicle uses significantly more silver than a traditional gas-powered car because of all the electrical components, the charging systems, the battery management systems. As the world transitions to electric transportation, that demand is only going in one direction, up. So throughout 2025, you had this perfect storm building. Safe haven demand from geopolitical uncertainty. Massive industrial demand from the green energy transition. And here's the kicker: supply deficits. The world was using more silver than it was mining. And that deficit wasn't getting better. It was continuing into 2026. By the end of 2025, silver had already made impressive gains, but nothing compared to what was about to happen in January 2026. Early January, silver was around $70, already more than double from where it started the year before. But then, things went absolutely parabolic. In late January, we saw this incredible rally that pushed silver to $121 per ounce on January 29th. An all-time high. Historic. People were calling it the beginning of a new precious metals supercycle. The rally was fueled by several factors, all hitting at once. You had heightened geopolitical risks continuing to escalate. Economic uncertainty was growing. There were serious concerns about Federal Reserve independence and what monetary policy would look like going forward. And then you had something interesting happening. Speculative buying from Chinese traders was adding what some analysts called froth to the rally. Basically, momentum traders piling in, pushing prices higher and higher. But here's where things get really interesting. China wasn't just sending retail traders to buy silver. The Chinese government had implemented export restrictions on silver. They were effectively hoarding it. When a major economy starts restricting exports of a critical industrial material, that sends a very loud signal to markets. It says, "We think this is valuable, and we're keeping ours." That kind of move by a government creates serious supply concerns for everyone else. So silver hits $121 on January 29th. Everyone's celebrating. Social media is going crazy. And then, boom, the crash. Within days, silver plunged 40%, from $121 down to where we are right now, around $78 to $79 per ounce. What happened? Well, on the surface, the trigger was the nomination of Kevin Warsh as the next Federal Reserve Chairman. Now, if you're not familiar with Warsh, he's known for having very strong views about Fed policy. Specifically, he's been vocal against maintaining a large Fed balance sheet. When his nomination was announced, it signaled to markets that we might be heading toward much tighter monetary policy. Tighter money generally means less liquidity, which is bad for assets like precious metals that thrive in loose monetary environments. But the Warsh nomination was just the spark. What really turned this into a full-blown crash were margin calls. Let me explain this in simple terms because it's crucial to understanding what happened. When traders buy silver futures contracts, they don't put up the full price. They put up a fraction, called margin. It's basically leveraged trading. You control a large position with relatively little capital. When prices are going up, this works beautifully. You're making money on a much larger position than you actually paid for. But when prices start falling, you have to maintain that minimum margin requirement. If the value of your position drops too much, you get a margin call. The exchange basically says, hey, you need to deposit more money to maintain this position, or we're closing it out. Now here's where it gets ugly. When silver started dropping after the Warsh nomination, it triggered margin calls across the market. Traders who were leveraged had two choices: inject massive amounts of new capital immediately or liquidate their positions. Most couldn't come up with the cash that quickly, so they had to sell. And when everyone's selling at the same time, prices fall even faster, which triggers more margin calls, which causes more selling. It's a cascade effect, a vicious cycle. Making matters worse, the exchanges actually increased margin requirements during this chaos. They raised the amount of capital traders needed to hold positions. This was ostensibly for stability, to reduce risk in the system, but the timing meant even more forced liquidation. Traders who might have been able to hold on suddenly couldn't meet the new, higher requirements. More selling, more downward pressure. The volatility we saw during this crash reached levels not seen since 1980. And if you know your silver history, 1980 was the Hunt brothers saga, when they tried to corner the silver market, and it all came crashing down spectacularly. We're talking about historic volatility here. So here we are in February 2026. Silver is trading around $78 to $79 per ounce, still up 145.27% from a year ago, which is absolutely incredible by any measure, but down 40% from the peak just 10 days earlier. And everyone wants to know, what happens next? Let's talk about the different scenarios, because the honest truth is nobody knows for certain. But we can look at the factors and the arguments on different sides. The bullish case is still very much alive. Some analysts are predicting silver could go to $175 or higher by the end of 2026. Gold Silver's lead analyst, Alan Hibbard, actually expects silver to perform even better in 2026 than it did in 2025, potentially increasing by over $100 per ounce. That would put us at $175 plus from current levels. What's the reasoning behind these aggressive forecasts? Well, the fundamental drivers haven't changed. The supply deficit is still there. We're still using more silver than we're mining. Industrial demand from solar, EVs, and AI infrastructure is still growing. The green energy transition isn't stopping. If anything, it's accelerating globally. And now you have governments like China restricting exports and stockpiling silver as a critical strategic material. From a technical standpoint, bulls would argue that we've found support in the $70 to $80 range. This could be a consolidation phase before the next leg up. After all, corrections are normal even in massive bull markets. The fact that silver is still up 145% year over year despite this crash suggests the underlying trend remains incredibly strong. Then there's the monetary policy angle. Yes, the Warsh nomination spooked markets, but the reality is that the Fed is in a very difficult position. If they tighten too aggressively, they risk crashing the economy. If they keep money loose, inflation concerns persist. Either scenario could actually be bullish for precious metals. Economic crisis? People flee to silver and gold. Continued inflation? Same thing. Precious metals historically do well in both environments. But let's look at the bearish case, because it's important to consider both sides. Goldman Sachs analysts have expressed concerns specifically about silver compared to gold. They're worried about supply constraints in the London market and what they call persistent liquidity squeezes that can cause extreme price behavior. Basically, the market is somewhat dysfunctional. When you have this kind of volatility and liquidity issues, it creates risks that are hard to predict or manage. UBS has pointed out something else interesting. They note that at very high silver prices, industrial demand might actually start to decrease. Companies using silver will look for ways to optimize their usage or reduce input costs. They might use less silver per solar panel or find alternative materials where possible. High prices contain the seeds of demand destruction. If silver stays at these elevated levels, manufacturers will innovate around it. There's also the concern that a lot of the speculative froth has been washed out by the crash. The highly leveraged traders have been liquidated. The momentum players have been shaken out. What if the rally was primarily driven by speculation rather than fundamental demand? Without that speculative fuel, can prices sustain these levels? And then there's the Fed policy uncertainty. If Warsh is confirmed and he does pursue aggressive tightening, that could create a stronger dollar and less liquidity in markets. Precious metals typically struggle in that environment. Rising interest rates make bonds and savings accounts more attractive relative to metals that don't pay any yield. So what's the most likely scenario? Here's my take, and remember, this is analysis, not a prediction. I think we're in a consolidation phase right now. The market is digesting what happened. The weak hands, the overleveraged traders, they've been flushed out. What remains is probably more stable ownership. Physical buyers, long-term holders, industrial users who need the actual metal. In the near term, I'd expect silver to continue trading in this $70 to $85 range while the market figures out what's happening with Fed policy. The Warsh confirmation hearings will be critical. How he presents his policy views will give us clues about what to expect. If he comes across as more moderate than feared, we could see a relief rally. If he confirms the hawkish concerns, we might test that $70 support level. Looking at technical levels, $70 is really important support. If we break below that convincingly, we could see another wave of selling down to maybe $60 or lower. But if we hold above $70 and start building momentum, a move back toward $90 to $100 seems very possible. Medium term, meaning the next 6 to 9 months, I think the fundamentals matter more than the short-term policy concerns. The supply deficit is real. The industrial demand is real. China's export restrictions are real. These aren't going away. So unless we see a major global recession that crushes industrial demand across the board, the fundamental case for higher silver prices remains intact. The wild card is geopolitics. We're in an increasingly unstable global environment. Any major crisis, whether it's military conflict, a financial system shock, or a currency crisis somewhere, could send precious metals soaring as safe haven demand spikes. Silver tends to be more volatile than gold, but moves in the same direction during these events. There's also the relationship between gold and silver to consider. Historically, silver tends to outperform gold in precious metals bull markets. It's more volatile on both sides, bigger moves up and down. If gold continues its own strong performance, silver often follows with even more dramatic gains. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been moving in silver's favor. If that trend continues, it's structurally bullish for silver prices. One thing I'm watching closely is Chinese demand around the Lunar New Year period, which runs from February 16th to 23rd. Markets tend to get thinner during this period, which can create extra volatility. But it's also traditionally a strong buying period for precious metals in Asian markets. How that plays out could give us clues about demand strength. Here's what I think is really important to understand. Whether silver goes to $175 or back to $60, we've entered a new era for this metal. It's no longer just a monetary metal or an inflation hedge. It's become a critical industrial commodity essential to the energy transition. Solar power isn't going away. Electric vehicles aren't going away. Data centers aren't going away. All of these require silver. At the same time, you can't mine significantly more silver overnight. It takes years to bring new mines online. The supply deficit we're seeing isn't easy to fix. So you have growing demand meeting constrained supply. Economics 101 says that pushes prices higher over time. The question is just how much volatility we have to endure along the way. The 145% gain we've seen over the past year might seem insane, but in the context of a genuine supply-demand imbalance in a critical industrial material, maybe it's not so crazy after all. Could it happen again? Could we see another 145% move from here, taking silver to $190 or beyond? It's possible. The fundamental factors that drove the first 145% are still largely in place. But could we also see silver fall back to $50 or $60 if Fed policy gets really aggressive or we hit a major recession? Yeah, that's possible too. This is a volatile asset. Anyone telling you they know for certain what's going to happen is either lying or delusional. What I can tell you is this: the silver story is far from over. We're in the middle of a major, multi-year trend driven by real, structural changes in how the global economy uses this metal. There will be rallies and crashes along the way. That's the nature of commodity markets, especially ones this volatile. But the direction of travel seems pretty clear when you zoom out and look at the big picture. So can silver's insane 145% gain happen again in 2026? I honestly think it can. The ingredients are there: the supply deficit, the industrial demand growth, the geopolitical uncertainty, the monetary policy chaos. Whether it actually happens depends on how these factors play out over the coming months. But dismissing the possibility after one sharp correction would be a mistake. Some of the biggest gains in bull markets come after the shakeouts that scare away the weak hands. The question you need to ask yourself is this: do you believe in the structural story? Do you think the world is genuinely transitioning to green energy, and that transition requires massive amounts of silver? Do you think supply deficits matter? Do you think geopolitical uncertainty is going away anytime soon? If you answer yes to these questions, then short-term volatility is noise. If you're not sure, then maybe this isn't the market for you because this ride is not for the faint of heart. I want to hear from you. Where do you think silver is headed by the end of 2026? Are you buying this dip, selling into strength, or sitting on the sidelines watching? Drop your prediction in the comments. I'm genuinely curious to see what this community thinks is coming next. And if you found this analysis helpful, hit that like button and subscribe because we're going to be tracking this silver story closely as it unfolds. This is just getting started.